Right, ladies and gentlemen, a beautiful evening, a beautiful night, and yes, indeed, a beautiful audience as well. So, as the setup is being ready, you know what excitement is about to start on this exciting evening together with Executive Edge as well. So, ladies and gentlemen, and as we reflect on this amazing journey of 25 years of Amana Takaful insurance, ladies and gentlemen, it is now time to focus, to grab your attention to the most insightful and the most exciting part of today's proceedings as well. So, ladies and gentlemen, so you already know it's going to be a panel discussion. And our theme for this evening is about evolving consumer dynamics, strategies for financial services in shifting landscapes. And I know we have faced a lot of challenges, but you being industry leaders has always been resilient and you have been fighting back, and this is definitely all about positivity tonight as well, and we keep on that and moving along with the panel discussion on this grateful evening as well. Ladies and gentlemen, we'll explore the ever-changing behaviors of consumers and the crucial strategies and financial services must adopt, especially in light of recent government policies and market trends as well. And ladies and gentlemen, to guide us through this thought-provoking evening and the discussion, we have with us a highly respected moderator to guide us on this panel discussion, and he is none other than Mr. Shamindra Kulagammanage, the editor-in-chief of Ashilian magazine as well, who has been at the forefront of the financial and economic journalism here in Sri Lanka, and he will lead us and our esteemed panelists through this insightful conversation as well. And ladies and gentlemen, it is now time to introduce our distinguished panelists for this evening as well. And first and foremost, introducing none other than Ms. Gayathri Manatunga, Head of Assurance at Ernst & Young Sri Lanka and Maldives. With 29 years of experience at Ernst & Young Sri Lanka, including 19 years as a partner, Ms. Manatunga is a fellow member of the Institute of Chartered Accountants of Sri Lanka and brings invaluable expertise in the field of assurance. Ladies and gentlemen, coming up next is going to be Mr. Thilan Wijesinghe, the Chairman and Managing Director of TWC. Mr. Wijesinghe is a pioneer in executing public-private partnerships, so we call that as PPP, transactions in Sri Lanka. He has played a leadership role in securing over $2.25 billion in PPP and privatization deals as well. And ladies and gentlemen, his diverse entrepreneurial ventures have left a significant mark in sectors ranging from renewable energy to hospitality. Ladies and gentlemen, Mr. Thilan Wijesinghe. And introducing our third panelist, ladies and gentlemen, none other than Dr. Naveen Gunawardane, Chief Investment Officer and co-founder of Linear Wealth Management. Dr. Gunawardane has over 23 years of experience in capital markets and leads one of the largest private institutional investors in Sri Lanka. He has also worked in international markets and began his career at Goldman Sachs in London, and he holds a PhD in practical physics from Imperial College, London. And ladies and gentlemen, let us all put our hands together and welcome our moderator and our esteemed panelists for the stage as we mark the Executive Edge panel discussion right here on this beautiful evening.
Good evening, ladies and gentlemen. It's lovely to see you this evening. Thank you for joining Executive Edge from Amana Takaful Insurance. You've already met the panel, and we'd like this discussion about financial services in Sri Lanka and how they link to consumer behavior to be one that also involves you. Our panel we were discussing was very keen to have you participate. I think that's also the spirit of this evening's proceedings. This is not meant to be a monologue, and there's a couple of ways you can do that. I think there's a QR code on your tables. Yes. You can scan that and type in any questions that you have for the panel. And this is quite a wonderful panel to be moderating, I must admit. I think we are at an interesting juncture in the country, and so it's a confluence of circumstances and a wonderful panel. So I hope you make the best of it. You can also ask questions from the floor. Ashara, that's possible, right? Questions from the floor is also possible. So do that. You can start doing that now. But you've already met the panel. And let me start with a first round of quick questions, and I'll start with you, Thilan. We're talking about the financial services sector and consumer behavior, but all this relies on the macro environment. You've been working with Sri Lankan governments in government and also as an advisor to government on economic reforms, on structural reforms, right? You were part of a team that pioneered the one of Sri Lanka's most successful public-private partnerships, that is the SAGT partnership, that is now in its close upon 20 years or more, is that? 25. So the term of the PPP was 30 years, or 25 or 30?
Started in 96 when I was chairman of the BOI.
BOI, okay. So my first question to you is, Thilan, right? When you look at the challenges confronting Sri Lanka's new government, they've never been in government before, and there's a lot to unpack. This is for a government. This is not an easy time to be stepping into, because we're just about finalizing our external debt restructuring, and there is a very straight and narrow path that they have to trod. I think they are well aware of it, but apply the wisdom of this several decades in public service and advising governments, and capture to us very quickly what you think the challenges are.
The key challenge is, Shamindra, is the relative lack of fiscal space that the government would have to undertake certain types of fanciful projects. Fiscal prudence is really the key mantra, and that's what's going to keep the government disciplined not to pursue the sort of white elephant projects that we have done in the past. That's the first point. The second point, and I know this for a fact, that the government has, well, when they were politicking, some of them actually had interactions with me, they fully comprehend that without local and foreign private sector investment, that they're doomed. So therefore, they're very well aware that any action by the government to impact private sector investment confidence will have dire consequences. So in that scenario, I have always been an optimist. I personally do not think that the relative lack of experience of the government in governance is necessarily a bad thing unless a few things actually happen. Within the framework of understanding that it is the private sector that must provide much needed capital, both local and foreign, whether it's in infrastructure, whether it is in tourism, whether it is in various types of sectors. Now, the key aspect that why I'm optimistic is that I go back to 1994. Some of you might have been very, very young at that time, when we had a president, of former President Chandrika Bandaranaike, who was running for the office of the president. Her political rhetoric was far worse in terms of building private sector confidence than anything what I've heard from the current president or anyone from the NPP government. Anti-privatization, pro-labor, talk of a workers' charter and strengthening labor laws, all of which were part of the political platform, and no sooner that she got elected, the stock market started tanking. There was a 6-year period within which the stock market declined 70%. But here's the point. She had 3 key advisors that helped her pivot towards a more centrist economic policy And in my view, over the last 25 years, she has been the most reformist president. I'm not saying because I was part of her government, but these three key advisors were A.S. Jayawardena, former Secretary to the Treasury and former Governor, Mr. Rajan Asirvadam, President Partner of KPMG, and Dr. Lal Jayawardena, eminent economist who moved from Denmark to Sri Lanka, who was an economic advisor. These three key people, along with a few others, advised her to reform the country, because at that time, like today, where there were fiscal constraints, there were constraints because of the war. And that is at that point, after 1 year of learning on the job, is when she told her advisors, go find me a new team. And that is when 25 of us, all of us in our 20s and 30s, we quit our private sector positions. Most of us were investment bankers, etc., and joined the Privatization Commission, which was called Public Enterprise Reform Commission, which privatized about 12 to 14 enterprises, no strikes, pioneered PPPs, and brought in more foreign direct investment as a percentage of GDP, which was higher during that time as opposed to the war. Now, why I'm optimistic is that we see the fact that the president partner of EY is today an economic advisor. A good friend of all of us, Hanif Yusuf, is the governor of the governor of the Western Province, and Arjuna Herath has been appointed chairman of the BOI. And I'm therefore hopeful that we won't have a 1 year period of people learning on the job. So my view is that if the political authorities take the advice of the bureaucracy, particularly, I have to emphasize this, the Ministry of Finance and National Planning Department, and the private sector advisors who are coming on government, I believe that Sri Lanka will head towards greater prosperity over the ensuing years. Sorry if I spoke too much.
Right. Naveen, let me bring you in. You are a fund manager. You have your hands in the public markets, debt and equity. There is a sense that, I mean, we've all seen how the stock market has rallied very recently. It's wiped out all those losses ahead of the election when there was a lot of apprehension about the continuation of the external fund facility from the IMF. What do you think from a private sector point of view, from a market's point of view, are the challenges confronting the government currently? What should their priorities be, in your opinion?
Thank you, and thank you very much for Amana Takaful for inviting me, and congratulations on 25 years. You're right, just before the election, the markets, both the equity market and the debt market, in the form of, we all saw what happened to bond yields as well. There was quite a bit of uncertainty. If you looked at what some of the government or the members of the party were saying, it looked as if the policy was to move away from the IMF program. There were conversations of renegotiating the debt sustainability analysis. So there was quite a bit of concern that if that party were to win the election, that they would deviate from the current trajectory. And when you say you're going to renegotiate the debt sustainability analysis, which is the foundation of the entire program, there would have been a high possibility that the IMF would have walked away. And there was also concern in terms of what could happen to the debt restructure. Now, what we saw after the election was the complete opposite of that. And I think we had to give credit where credit is due. Doing the right thing is not easy. And doing the right thing when the right thing is what most people may perceive to be something against the political ideology of a party, it's even more tougher. So hats off to the current government. I think they did the right thing. They very quickly engaged the IMF. More importantly, they kept on two very key people that were important for the debt restructure and the IMF program. That was the governor of the central bank and the Treasury Secretary. They stuck to the debt restructure or the agreement that we reached with the ISP holders. And that brought in quite a bit of confidence to the market, which is why we have seen the markets reacting the way they did. We've also started seeing foreign inflows coming to the market. We've seen about ₹1 billion worth of inflows into the equity market. We've seen probably about 7 odd billion worth of inflows into the bond market as well. So those are all very positive signs. Now, the challenge for the government is, they've done the right thing. They've been very sensible, very practical. The challenge for the government is to remain sensible, remain practical, and if they can do that, I agree with Thilan. I think the economic recovery that we've seen over the last year will continue, and I'll be quite positive on the outlook. But the key thing for the government is that they have to remain sensible, they have to remain practical, and very importantly, listen to advisors, and also advisors that may be giving them views which may be contrary to their political ideology or maybe some of the things that they may want to do.
We are also very grateful for Gayathri for taking the time to be here, because I know you have a terribly pressing day, particularly today, and you may have to leave us before the end of this session. But we are indeed grateful to have you in the panel, Gayathri. You are head of assurance at EY. You overlook also the banks as an extension of that role, the banks that do assurance work with you. Sri Lanka is about to sign off, hopefully very soon, on the commercial debt restructuring. A deal has been done. Now I think it's a matter of paperwork being finalized and a swap being done. In the context of what this has for the economy, how do you think the banks and the financial sector will be impacted? And by extension, what will happen to their ability to lend, what will happen to lending rates and their ability to deal with customers?
Thank you, and good evening, everyone. It is a pleasure to be here. Congratulations to Amana Takaful for this milestone that you're celebrating here today. So I think to put things into perspective, looking at how the last 4 years, looking at the unprecedented challenges that the country went through, and particularly the banking sector that played a crucial role in keeping things steady, I think it is noteworthy to mention some things here. I would say that the regulator has played a very proactive role and had built in much early on capital buffers that enable the banks to have sufficient capital during this crisis. The second is that the regulator had also implemented various directives timely to address other risks as they emerged. So wherever, for example, you could see a rise in the bad book, loans getting rescheduled, restructured, directives were issued so that the banks could look at the potential impact at that time itself without waiting for, the higher events to happen later on. And the third thing is that even including minimum impairment provision covers, all that meant that the banks were able to withstand all the pressures that they had to go through. And that is why you can see, even in the case of the ISBs, as of now, the banks have the adequate impairment provisions in place. And once this is inked the way it is, hopefully as what we have been made to understand, chances are that you will see reversals. So it is to that extent that I think, proactive measures have been taken to ensure the stability of the banking system, because it is crucial. Without this, you cannot forge ahead with economic recovery.
So if we anticipate provision reversals at most of the big banks that have ISBs on their book, what does that mean for customers, for lending rates, and what does it mean when this is done to the financial services sector in general?
Well, the customers would have the confidence that, as far as, starting with the depositors, that the banks are able to, forge ahead and really propel economic activity, grow the book, and hopefully in that whole context, have better returns and all of that, so on and so forth, protecting, most importantly, the deposit interests.
Thilan, can I bring you in here? You touched on what it takes to run, you went back to 1994 and what worked for the CBK government back then, right? Having the right advisors, right?
95, 96 onwards, yeah.
Yes. And if you look at the context today, right, what do you think, and Sri Lanka is now through a first phase, we have 2 IMF reviews, there's more than 2 years to run on the program. What are the likely or anticipated changes in the structure of the Sri Lankan economy that it will have to make to keep the IMF program on track in the next 2 years? And how should a government go about setting the groundwork to make that happen?
Yes, the IMF benchmarks are relatively tough to achieve, particularly the debt to GDP ratios, taxation to GDP, primary surplus, etc. Now, this is where I've always maintained a country's economy is as healthy as how assertive and competent its central bank is and its finance ministry is. I have seen multiple attempts of failure to reform the revenue generating agencies: income tax, excise, and customs. The last attempt, I can say this from first-hand experience, when I was chairman of the PPP agency under Mangala Samarivira, who was then finance minister. McKinsey did a 3-week pro bono study and made their presentations, McKinsey out of Malaysia, I believe, that demonstrated that they could potentially guarantee $500 million of additional revenue through the inland revenue just by plugging the leakages. They were willing to underwrite $100 million. Same with customs, same with excise. I need not elaborate. The excise sticker system, the award of that tender was fraudulent. It went to the wrong party. Especially when you consider that in Biagama, we have Thomas de la Rue that prints our currency. Why they are not printing our passports and these excise stickers, I fail to understand, because the government owns 30% of Thomas de la Rue, and over the last 30 years, government has received billions of rupees in dividends. It's also an export-oriented company because it manufactures currency for other countries, but we have to send our passport to Poland. So the point I'm trying to make is that so what happened to the recommendation by McKinsey? The finance ministry did not have the guts to implement it. They hid behind the fact that McKinsey asked for fees that were too high. But then I argued, look here, pay them in advance and promise them to pay 10% of incremental taxes that were collected. I failed. So that's point number one. Secondly, let's not get caught up in the rhetoric of whether we are privatizing Sri Lankan Airlines or not, or what have you. Let us look at what is the most effective way of making the state-owned enterprises efficient. If it is by unbundling the CB, I was part of the reform process in promulgating the Electricity Reform Act. If it means attracting a strategic partner to the airline, if it means privatizing the East Terminal at the port of Colombo, which the government is spending money on, which I don't understand why the government is spending $700 million on it, other than some other benefits that certain people would be getting. So the important aspect here, in my view, is now to ask the question, what are the reforms necessary to make the system more efficient? And it can be through, again, digitization. Sorry, one more point, and I can tell you the importance of reform. Sri Lanka was the first country to have a unique digital identity, 1971, some of the identity card numbers that you and I still have. We have miserably failed on at least 3 occasions that I know of to digitize our identity card system, similar to what India has done through the Aadhaar card and unique digital infrastructure that has been created, which has resulted in massive disintermediation and making the financial services industry more efficient. Why did we fail? Every tender ended up having to be cancelled because of corruption. I can tell you very responsibly that procurement of IT by the state has been one amongst the most corrupt in terms of what has happened in the past. So if we can simply, we have a government that has been elected on the basis of saying no corruption. We go ahead with the Indian government grant money of implementing the unique digital infrastructure, have the guts to reform inland revenue, customs and excise. And we ask the question, what does it take for us to make aviation more efficient, banking more efficient? For example, reduce the disintermediation costs, introduce fintech. So it is that level of reform that we need today, and I'm hopeful that apart from some of the macro aspects that were touched on, if there's a greater focus on the micro level institutional reforms, then I think we are heading towards a prosperous Sri Lanka.
Thank you. Naveen, it seems apt that I treat you as the macroeconomic guy on the panel, because that's of the panel, I think that's the hat, that you're the one who can wear that hat. I'll ask you to comment about the probability or the challenge that Sri Lanka will have around achieving some of the EFF specified targets, particularly the primary surplus that we have to record in 2025. The primary surplus is basically the budget deficit when you take out the interest payments, right? And we have a target of 2.5, a surplus, 2.5 surplus, right? We have a surplus we are likely to have a surplus in 2024. This is extraordinary for Sri Lanka, because Sri Lanka has been running more or less primary deficits throughout. How can a government strategize, a new government strategize around having to raise that surplus from a 0.8 target of 2024 to GDP equivalent to 2.5% in 2025, in your opinion?
So I think it's a 2.3% target. I think this year, the way we are tracking, we will be way ahead of the target for this year. So there are two aspects to that. One side is obviously the revenue side, increasing government revenue as a percentage of GDP. The second aspect is actually the cost side of the equation. Now, the IMF talks a lot about the revenue side of the equation. They don't really talk too much about the cost side of the equation. So what the government needs to do is to look at the cost side of the equation. There are challenges there, given that a large component of the cost comes in the form of wages. Typically, in the past, what you see governments do is to meet the targets, they tend to cut capital expenditure, which is not the right thing to do. So it is going to be a challenge to meet those targets. But I think based on the revenue proposals that are already there, I think I'm relatively confident that we should be able to meet the target for next year. Now, meeting a primary surplus is very important. What it basically means is that in terms of government borrowing, what has been happening this year is that a lot of the government borrowing has really been for interest payments. It's not to fund government expenditure. And that has a huge impact on the interest rate cycles in the country. If you remember the past, whenever you saw a small pickup in private sector credit, you had a disproportionate impact on market interest rates. With a government running a primary surplus, I don't think you will see that behavior. So what that means is, and that has implications to all of us, it has implications to businesses, certainly has implications for insurance companies, is that we could be looking at a scenario where over the next couple of years we have relatively stable interest rates. And that is why it's important that the government continues to run a primary surplus.
I will implore you, if you have questions for Gayathri, I would like anybody to take a mic, let us know, because Gayathri, like I mentioned at the outset, is on a really tight schedule, particularly today, and we are very grateful for you being here. So any questions to Gayathri, let me just put your hand up. I don't see one online yet. Gayathri, let me ask you this while we wait to see if we have questions from the floor, for you particularly. You gave us a broad outline of what is likely to happen with the banks once Sri Lanka finalizes its external debt with the creditors, finalizes a deal about the external debt with the creditors. From a not necessarily from a financial health point of view, but from what this would do to the economy. I don't know whether you can quantify this, but how much likely provision reversals, ballpark, like are we going to see? What are the haircuts are known already. We know what the provision levels at most of the big banks are. All the banks are listed, so we know all of them. What kind of quantum of money are we talking about? What is then the likely, I mean, if we look at the markets in excess liquidity right now, what's going to happen? What do you think will happen?
So I think the most important thing is like what Naveen and Thilan mentioned is that you have to follow through with the IMF program. And then with that, hopefully, we can close the ISBs that is now hanging loose and then get our country rating up, which is essential for investor confidence. And with that, then the other side of, or parallelly what you need to look at is economic recovery. And as you know, in any economy, the SME is the backbone of any economy. And right now, that is where we need to focus on. So I think particularly for the banks, having the reversals in place will mean that you will have a stronger balance sheet. And that means that you can lend and really grow to the sectors and initiatives and areas that you know you need investment to go in, funding to go in, so that you can help propel economic activity, particularly at this MSME sector. And I think do that, you have several other opportunities as well. You can go in for various funding lines, both guaranteed and otherwise, go to the government, establish certain, I think, like creating even the education hub, all of those even at a higher macro level, and more importantly at a SME level of identifying various initiatives like the women-led initiatives, all of those to bring in to propel the SME sector, I think is what is really needed. And the banks will have the capability to do that. And also, I think what should be looked at is incentivizing the banks, particularly looking at, for example, wherever they do get funding lines or they do come up with strategies to assist with uplifting the required, SME sector, that they be given various concessions as well in order to ensure that this can be forged ahead.
Any questions for Gayathri in particular? Please, you can put your hand up. I think we have a couple of mics out there. We'd be happy to take one. Just for Gayathri at this point, though.
I do apologize. I had another commitment, so I may have to take your leave. It's been a pleasure being here, and thank you very much for having me. Thank you.
Thank you, Gayathri. Naveen, I'll pick up from where Gayathri left off, and I suppose in your work you look at the nexus of consumer credit and consumption. You look at stocks that are financial services and also consumer stocks, right? Can you talk to us about what you have seen in the recent past and what you anticipate, particularly with regard to consumer credit, net interest margins in the financial services sector, and on the other side, what are consumers doing? When you look at consumer companies, the listed ones like Hema, Sunshine, etc., what does the evidence you see suggest about the health of the consumer, Sri Lankan consumer?
I think starting from, I would say, probably early last year, we've started seeing a pickup in consumer activity, right? When you look at the consumer cycle, first of all, you need to start looking at the finance companies. That's where you see the activity first before it goes into the banks. It starts with the we've seen a recovery in the domestic economy. If you look at the agriculture space in the country, which accounts for about 27% of the population, that has done quite well. What that has meant is that the agri and agri-related economy has bounced back quite well. If you look at the urban economy, talk about the services economy, that is the segment that got impacted the most in terms of inflation on one side and taxes on the other side, right? And that economy, I think, will take a few years to recover. You're probably 3-4 years out before your purchasing power or your real net worth or your real income comes back to levels that it was in 2021. Right? So in a sense, when I look at the Sri Lankan economy, I see two very distinct economies in play. We've seen the rural economy recovering very well, and you're seeing that in consumer behavior. You're seeing that in pickup in consumption. You're seeing that in pickup in terms of intermediate good imports, which go in for domestic consumption activities. Where we really haven't seen much of recovery has been what I would call the urban economy, that has the dual shock of inflation and taxes. Looking forward, what does that mean for corporates? Certainly, if you look at consumer companies, when you've had 90% inflation and 40%, let's say, volume drop, the consumer companies were still recording very high levels of GP. The problem that they had, if I go back to 2022, was the borrowing cost. Now with the borrowing cost normalizing, you're seeing the GP feeding right through to net profit as well. So our thesis was that consumer companies will see absolute growth in profits. Even though volumes were down, we are now seeing a volume recovery. If you look at, answering your question in terms of the sectors, you see that first in the F&B sector, so your non-discretionary items. Then you start seeing that in the personal goods segment, and the final segment that you'll see that would be on your discretionary items. Right now, we are seeing that recovery feeding into, I would say, the construction and the construction materials. The next segment would be more the white goods. So we've seen a very nice recovery in consumer, but it's a long way to go.
Just out of interest, you identified two reasons for the drop in urban consumer spending: taxes, higher taxes, and obviously inflation. When do you anticipate, a lot of listed Sri Lankan companies, can you clarify for us, are they exposed to more urban consumers, and when do you think that pickup will come? Now that on macroeconomic numbers, we are seeing some level of stabilization.
So I guess it depends on the type of company. If you look at the F&B, you've already seen a very strong recovery. But certainly if you look at white goods, we are quite a way to go. And that will be very much dependent on more, I would say, the urban consumer than the rural consumer. And I think if you look at financial services also, you're seeing that consumer recovery happening as well. So as I said, for the urban consumer, you're a few years away.
Right. Thilan, this question to you, you highlighted some priorities, getting the right people around to advise you, reform digital so that you have more transparency, reform revenue collecting agencies, right? You spent a lot of time looking at FDI in your career, and by extension public-private partnerships, which by their nature have to have a private component in them. If Sri Lanka's government, as you say, realize the need to bring substantial FDI, double the rate of FDI inflows into the country, what must it start doing now?
Integrate, one of the key issues, integrate more with India. I can give you some statistics. In 1999, when I was part of the Indo-Lanka Free Trade Agreement negotiating team, exports from Sri Lanka to India was only $50 million. 5 years later, exports from Sri Lanka to India increased to $550 million, a more than tenfold increase, of which 90% or more were under preferential tariff lines. If you look at the Indo-Lanka trade balance today, it's very much in favor of India. However, under preferential tariff line items, Sri Lanka runs a trade surplus with India. India only exports to us less than 5% of the exports to us is under preferential tariff lines. Ours, it's more than 65%. Now, the former president and Prime Minister Modi signed a vision document of a greater integration with India under several verticals: ports, shipping, aviation, tourism, people, fiscal, etc. We must implement that and proceed to finalize the services agreement with India, which will build on the free trade agreement, which will also modernize the free trade agreement. Now, that would also open certain pipelines of investment from India to Sri Lanka. Prime Minister Modi has been pushing many large corporates to come here. Yes, some of them have come here on the basis of unsolicited proposals, but nevertheless, it has been happening. Now, in the case of focusing on FDI, we must move towards more active sourcing of FDI as opposed to passive, which means we can't just sit back and say, let's hope somebody will come and build export-oriented business. So we've got to create the necessary conditions. And that's what we did in the late 90s. We built 8 free trade zones in order to have plug and play. Now, we desperately need plug and play infrastructure in this country. Now, it has been spoken of that the private sector would invest. No. These have to be done as public-private partnerships. Then we need to look at the mining and mineral. Let's look at the certain sectors that can make a genuine change in export dynamics as well as FDI, the mining and mineral sector. We have exploited less than 5% of our gem deposits, almost 0% of our titanium and phosphate. We are importing fertilizer when we have enough phosphate deposits, not just to meet entirety of Sri Lanka's demand or close to that, as well as export. So we need to really look at how do we attract large-scale FDI also into agriculture. In the Boraragala district, for example, there's more than 100,000 acres of deforested lands. So you can do PPP type things. In fact, I've done a study on, actually when I was on the board of Kahawata plantations, I looked at how can we bring that British structured, somewhat slave-driven plantation model of the 1800s to the 21st century. And that includes a combination of having philanthropic funding, government funding to build large-scale agri-zones. Now these are possible. So my point is there are various other things that we can look at tapping into as far as FDI is concerned. Tourism, yes. ICT. Looking at Port City with fresh eyes. I can talk for hours on that. I mean, it is a colossal failure, partly because of poor policy making and legal drafting on the part of government, and partly because of geopolitics. But there are solutions to it which a proactive government needs to address. So my point is that through the Port City Commission, through the Board of Investment, there needs to be a serious reform of these institutions and the way the general public service works towards facilitating investment, minus corruption, and working towards, improving ease of doing business. I mean, sorry if I'm giving a long winding answer, but significant potential is there for us to increase our FDI. Just one more point. Now, why is India talking of Indo-Lanka grid connection for exporting our power? Because Sri Lanka has 55 gigawatts of offshore wind, of which half are in shallow waters. And over the next 5 years, offshore wind would become profitable. And of course, we have 12,000 gigawatts of potential onshore. Of course, all of that is not possible. But there is a distinct possibility that we could actually export energy to renewable energy to India and then move towards green hydrogen. But someone needs to take a proactive approach and start to think big, because $5-10 million investments is not going to move the needle. We've got to think about 500 million, $1 billion type investments, because when we really look at the history, the number of investments we've attracted that are more than $200 million, I can count on my hands.
This is your last chance for a question from the floor. Anybody out there has a question? Right. If we don't, I will ask Naveen to take a minute or two for any final thoughts, and then Thilan to take a minute on final thoughts. Any questions from the floor? Okay. Naveen, final thoughts. Take a minute or two.
So just to try and go back to the theme of the discussion, I think we've deviated a little bit from the theme. I guess for financial services industry in Sri Lanka going forward, the key challenge is going to be innovation, and I'm very glad that you all talked about innovation in that presentation. So for the banks, if you look at the consumer, what we are seeing is that is getting a little bit more financial savvy. So they're asking for something a little bit more than what banks or insurance companies have been traditionally producing. So if I look at the banks, banks tend to just focus on the deposit side of the equation. If I take a look at the unit trust industry, and if I look at the unit trust industry AUM or assets under management as a percentage of banking sector deposits, that was about 2% or a little under 2% in December 2022. It has now, the unit trust industry AUM is now 5% of banking sector deposits, right? So that tells you that consumers are saying, listen, we need something a little bit more than the deposit. So that means if you're a bank, you need to innovate. You need to start introducing investment products into your mix. You need to start introducing wealth management products into your mix. Now, what does that mean for insurance companies? Again, it's going beyond protection. It may be offering investment products, which I know has been done in the past, or it could be offering protection on things that you would normally not have done. So moving away from assets, can you start looking at offering protection on investment products like you get in other parts of the world? So these are the type of innovations that, from a product point of view, that banks and insurance companies may have to look at as we go forward. Thank you.
That nicely ties this conversation up. Thilan, last words to you.
My last words would be that now that the financial system has stabilized, the regulators need to look at some of the ideas that are put forward by Naveen here with a lighter touch. I know for a fact that there have been significant resistance towards banking sector consolidation. I'm firmly of the view that when you have two inefficient behemoths in the form of Bank of Ceylon and People's Bank, listing these become absolutely important so that the overall sector becomes more efficient. Encouraging mergers of banks, we have too many banks, is going to be vital, because the overall system to become efficient, there must be much more proactive regulations. There have been considerable resistance towards introduction of fintech products caused by certain vested interests, and also somewhat of a resistance from the settlements and payments division of the central bank. So therefore, now is the time to ensure that there's a level playing field, because it took years, for example, for SLIC to broken up into life and general, causing inefficiencies within the whole industry. So this is the time where the regulators must take the bull by the horn and say, now, okay, we've stabilized the system. How can we make it more efficient and introduce the sort of lighter touch regulations that allow these sorts of innovation and consolidation to happen in the market, so that ultimately who benefits? The consumers, SMEs, and industry at large.
Thank you. I think that wraps the discussion up. Ladies and gentlemen, a warm round of applause to the planner. Thank you very much. Do enjoy the rest of the evening. It's good night from us.